Hello, everyone, and welcome to another episode of the Game of Loans podcast. Today, we have a very special guest in the form of Dee Ludlow, flying in all the way from Dubai just to have this chat with me. I'm sure this is not the only reason he's done that, but Dee, how you doing? You all right, mate?
Good, mate. Yeah, I'm happy to be here.
Good, good. Now, for anyone that lives under a rock and doesn't follow you or come across you on social media, give us a little bit of a rundown as to who you are and what you do.
So, my name is Dee Ludlow. I'm the founder of the 5am Club. I'm sure we'll get into that a bit later. I invest in many different things. I was predominantly investing in property until the whole COVID thing. But yeah, I'm just sort of an all-round investor who likes to see how far I can take the capital and enjoy life. I like traveling. That's why I'm here. So yeah, that's pretty much me.
Yeah, I am. Obviously, I've been avidly following your exploits in Dubai. It seems as though a large proportion of the UK has kind of just decided to emigrate to Dubai. So that might be a good place to kick off with. It's amazing, isn't it, that if this coronavirus pandemic happened 10 or 15 years ago, actually it probably would have been a hell of a lot worse because the likes of yourselves and others wouldn't have been able to go and continue working elsewhere, or wouldn't be able to travel there, and wouldn't be able to do what you do outside of a normal office environment. So talk to me about that. How did that sort of come about, and how easy is it for you to continue conducting your day-to-day business when you're miles away?
So I was here around 2 months ago with a few friends, and it was something that been on the cards for a while about maybe coming out here for a couple of years. And for one, I like the sun, and two, I think the expat communities in places like Dubai, Singapore, Hong Kong, I think it does a lot for you as an individual. Like my in Hong Kong, every time I go out there, a lot of his friends, people I meet within the expat community, they want to help you. So regardless of what you say, it's the first thing they say is, look, how can I help you? You need to do this, this, and this. And I feel that, I like that environment, whereas I don't feel that we get that as much in the UK. People do help. I'm not going to take it away from anyone. People do help, but I feel that the help is more in these communities. So I like the thought of that. Secondly, I have three daughters, so I want the education. I like the fact that they can go to a school. Everyone's parents of the people in the school are there for a reason. They're either fairly successful in what they do, or they've made the leap for a reason. Obviously, I like the multicultural aspect of it all as well for my children. So it ticked all the boxes, to be fair, at the moment. And it was something that was on the cards. And then when I heard that we was going into another lockdown, I thought no better time than now to maybe move the business out there. We're probably going to be in lockdown for at least half of this year, if not further lockdowns again. So I thought there's no better time ever than to try it.
Yeah, no, it makes perfect sense. And as I was saying, with the technology that we have available to us now, you can run a successful business from pretty much anywhere in the world. Do you feel as though, I'm getting this at the moment because my business, Grand Union Finance, at the time of recording, is only about 7 months old, and we're actually finding it quite difficult. There's three of us in the business at the moment, and we're really struggling with the fact that we are all remote, because the time that's taken out of our day communicating with one another is actually quite a lot when we compare it to just being in an office. So do you find that because you're probably more established in what you're doing, that has also helped as well, that the fact that you can kind of do it anywhere, because the teething issues that you come up against when you're growing a business, when you're in that sort of growth stage, are kind of behind you?
Yeah, I also think that it works both ways. I think that working remotely has helped a lot of businesses save time, but also on the other side, some businesses has made it harder, because if you're in like a good office environment where everyone bounces off each other, people lose that sort of motivation when, they're, even though you don't realize it, sometimes people rely on that sort of environment. So I think that would be harder. But then for people who's more solo, I think it helps because they're more remote. Zoom calls are only had if needed. Whereas if you're sort of just in the office on a normal day to day, you end up doing quite a lot of pointless meetings that can be done on the phone or on Zoom. But yeah, I think it works both ways. All depends on the individual. But I think that people especially like yourself, you can work remotely, even though you have a team, and it's nice to be around the team. Working remotely, I think if someone's not doing it already, I think that it's quite essential that people try and do something that takes their business online if you can, more than ever.
Yeah, I would agree with that, and I think it's. I mean, I like my little phrases, and one I've been using a lot during lockdown is in every adversity there's opportunity, and I think whenever a problem arises, a lot of people see that as a massive negative, but actually I see it as a huge opportunity to be able to actually improve what you're doing. And so for us at the moment, this communication issue, we're as busy as I have ever been as a broker in 14 years of doing what I do, and so that in itself is a problem that needs solving. And with us all being remote, it's even harder. But what it does do is it's amazing the emails that we have bouncing back and forth with ideas on streamlining things, even silly things like I've just discovered Calendly. So, it's just the most amazing thing in the world to just save that little bit of time in terms of organizing your day. And that's what it's all about, isn't it? Embracing technology, finding ways to be more efficient and run your business better, and problems arising allows for that to take place.
Yeah, I think, for one, you look too young to be doing this for 14 years.
Thank you, Just for Men, sponsors of this episode.
And secondly, like you said, there is always an opportunity in a crisis. You adapt, improvise, overcome. It's quite easily in situations like, especially COVID, to sort of roll over and not do anything. But I think that, like you said, the quicker you find the solution to the problem, and there is always great opportunities, and this is where people grow in times like this. So yeah, it's just looking for those areas that you can grow in.
Yeah, love that little nugget there. So, I mean, look, one of the main reasons that I find a lot of your online content pretty fascinating is it surrounds a lot to do with the 5 a.m. club. I mean, I'm one of the millions of people all over the world that's read The Miracle Morning, which obviously is a massive advocate of this philosophy of getting up early, getting some extra hours into the day. I'm interested to find out how this idea came about. Was it just yours, or did you sort of throw this off of other people? Did it grow organically, or was it like a specified, right, we're going to start this club because we think that we could be in charge of a real kind of movement here?
So I've never said this before, but I've actually never read the book.
Okay.
So
it's all right. It's pretty much get up early, do your stuff.
So the way it come around was when lockdown first happened, I did start getting really comfortable, and I'm all about stay outside your comfort zone. I love Tim Ferriss, and he sort of says, even if you're just trying something new as a food or drink, do something that takes you out your comfort zone every day. So I was sort of in that routine, and then I found myself getting very comfortable, waking up later than usual. And I was like, this isn't good, because I was stuck in the house. So I called like 2 or 3 friends and said, look, let's just jump on a call at 5 a.m. 4's too early. 6 is a bit like normal. Let's jump on a call at 5 and let's just talk about business, see if we can help each other and what we're all doing. And as you know, on social media, people started sharing it on Instagram, started getting more on the call. And then when it got to like 15 to 20 on the call, it started to get hard to free-flowing conversation. So we started asking people on the call, look, do you want to do a little presentation on what you do? And then it just went from there. And when it got bigger and bigger, it started taking a lot more time up. And my friend was like, look, mate, you need to monetize this. You have a great community that want to learn. You're providing great sort of value from your speakers. Why don't you just monetize it, spend more time on it, and take it to the next level? And that's sort of how it happened, really. And I did get a bit of backlash from a few education companies when it was monetized, that, you're charging like too cheap for this education. I'm like, look, people are only giving what they want to give. They're speakers. I just want them to come and talk about what they're doing. And if they can give value, that's great. And I feel that it's a nice place, especially if people want to get started, to come and access material at a very low barrier to entry, instead of paying sort of like your 10, 20 grand for knowledge on one certain thing, when they can come here and they can learn about everything and have some base knowledge on anything. There's stuff on the portal that, if you want to learn about gold, if you want to learn about Bitcoin, property, NLP, whatever you want to learn about, there's some information on it. And I think that it's quite important that people get that chance. We can all go out on YouTube, and most stuff is on YouTube, to be fair, but if you can try and consolidate it, put it in one place, so they haven't got to try and search for what's good and what isn't, then that's sort of what it was all about.
Yeah, no, it is a great philosophy, and yeah, I love that. It's funny how I've kind of learned this. I'm a massive fan of reading biographies and autobiographies of like really successful people, and one key sort of thing that I seem to find is that you find in a lot of education, people advocate this whole, you need to have a plan, you need a strategy. So many of the world's most successful people had no plan whatsoever. And their ideas were born out of trying things. Something was successful, so they just took it to the next level, and then they figured out what the next level after that was going to be. I mean, I wouldn't necessarily say that having no plan whatsoever is a good thing, but I think that just highlights exactly what you've just done there. Is you kind of had an idea and it's turned into something great, and you've actually just jumped onto that and then just put more effort into growing it, which I think is awesome. But in terms of just this whole philosophy of obviously the Miracle Morning, which you haven't read, but it has this same kind of philosophy of, get up early, you get to do more. Is that kind of where this came from? Was, you're doing these presentations early in the morning, they're done by 6, half 6, whenever it is, and you then have the whole day again to still be doing. So you've done all this learning, but then you've still got the whole day to really crack on with your business.
Yeah, 100%. And obviously, because I got 3 kids, I thought I need to be up earlier anyway. And then when I started to, my dad was always an early riser. And then when I did start waking up at that time, you do realize, like you said, a 6 to half 6 is done. You've already sort of acquired some sort of information or knowledge, whether you already knew about it or not. You still learn something. And then, literally, I feel the days that I do, because I don't wake up at 5 a.m. every day, but if the days I do wake up at 5 a.m., I feel by midday, I've got a whole day's work done. And then I feel like, wow, I still got all this time left. And, to be fair, I think that I know some people say you don't need to wake up at 5 a.m. and look, it's not for everyone, right? But I feel that when you do wake up those few hours earlier, you are putting yourself ahead, especially for the working day. Now, don't get me wrong, some people work better at night, but it's, similar scenario, whichever works better for you. If you don't work better at night and you want to watch Netflix and have some time off, then I think early is better for you. But then if you are productive at night, then do what's best for you. I think it's all down to the individual, but I definitely think that the mornings, it's just something about the mornings when you wake up early and things are done before 9 o'clock, and it just feels so different.
Yeah.
So yeah.
I used to. So number one, I mean, I'm totally with you on that one. My evenings, I very much like to spend watching Netflix with the missus. To be honest with you, I won't lie. But I tend to do a lot of presentations at evenings, at networking events and whatnot. So sometimes I have to, but I do try and sort of really bring my day to a close by 7 p.m. as a maximum, unless I am doing these kind of presentations. So yeah, more morning time, the better for me. But it is funny. I used to do this thing back when I was employed. I was always the first into whatever office I've ever worked in. I was always the first in. And what I used to try and do was, especially in my line of work, technically, I mean, I don't view it as this. I think we're giving advice, but a lot of companies, unfortunately, with mortgage brokers, they view it as you're a sales team. And so when you are a sales team, if you've got targets and you're competing against other people, any way of getting, not one up, but getting ahead of the game is really important. So I actually came up with this idea of my pre-9 a.m. list. So the night before, and I still do this now, the night before I would draw up my list of like to-dos for the day. But obviously there are certain things you can't do outside of normal working hours. I can't call banks. A lot of the time I can't really call clients sometimes. There's lots of stuff you can't do. So I would go through that list and I'd say, right, which of these things could I do outside of normal working hours? And then that would become like my pre-9 a.m. list. And it was stupid things, just like writing an email to update a client on something, or doing some compliance work, or you're doing some admin work, updating my software system with my notes and all that kind of crap. And it is this stupid little menial task, but they have to get done, and otherwise they clog up your day. And so whereas I was watching some of my colleagues walk into the office at 5 to 9, or even sometimes 9 o'clock on the dot, and then going to get a coffee, going for a wee, sitting down, opening up their emails, and they're not really doing anything till 9:30. As soon as 9 o'clock hit on the dot, I was on the phone. Then I'm on the phone talking to lenders and clients all day. And then at 6, I might, spend then maybe like a half an hour, going through some of the admin tasks that have come up out of that day, and obviously writing that list for the next day. So, and you're right, it's that sense of achievement. I get to 9 o'clock and I'm like, I've already done like 5 things. This is awesome. And it sets you up for the day, right?
100%. I think that being productive is something that people sometimes feel that they've been productive and they're not. And I used to be like, it's because you're in front of your laptop and you got your workbook out, you feel that, oh, I'm working. But if you worked out how many hours of the day you actually work without being distracted, it is, it is hard. So I think that what you said there is a great analogy of what you can do.
Yeah, it's funny actually as well, because another great book for business owners is a book called The E-Myth Revisited. I don't know if you've read that, but if you haven't, honestly, it's definitely well worth a read. A bit dated, but all the stuff's still relevant. And one of the things they talk about in there, you talk about actually understanding what you do day to day, and actually this little bit that I'm about to say comes from a Tim Ferriss book, which is how it's amazing how every job in the world can get done between 9 and 5. And the amount of paper pushing that happens in offices is outrageous. But in the E-Myth, they talk to you about actually trying to figure out different roles within the business. And the only way you can do that is to actually kind of keep note of your day-to-day workings. What tasks are you doing, and then categorizing those tasks into job roles. So was that task a sales task? Was it a marketing task? Was it an admin task? And you slowly start to actually build up positions within your company that you can potentially fill and outsource at some point in the future. But actually what it also does, it makes you very, very aware of all the time that you procrastinate throughout the day, because you can't write down, I spent 2 hours procrastinating today. That doesn't count as a task.
No. Yeah, you're right.
So it's a really, really, for any business owners that are listening to this, it's a cracking. I mean, a lot of people are really busy at the moment, so you have to try and find the time in the day to do it. But in terms of just diarising what you're doing, it's amazing, and it really does, like you say, it makes you figure out how much time during the day you're actually spending on work. And actually, what it does as well is it makes you realise that you might be working hard, but if you worked smarter, you might even be able to work a shorter day, and then go out onto the golf course or whatever in the afternoon, or go surfing in the morning, whatever you fancy doing.
Yeah, exactly.
So Dee, I wanted to, obviously we've chatted a lot about the 5 a.m. club, which is a lot of the reason why I wanted to chat with you today. But I'm also really interested about what you actually do for a living, in terms of, you mentioned property and you mentioned the investing and stuff like that. We've just gone through a pretty shite year, to be quite honest with you, for various different reasons. Lots of opportunity there, but what have you kind of taken from last year that maybe has changed your investing strategy, I suppose, going into 2021 and beyond? Has it changed dramatically, or has it really just been a kind of a little deviation of that?
Yeah, it's probably a slight deviation. It's not that I don't want to invest in the same things I was investing in. It's just, I believe being aware, if you're aware, you don't become a victim. So it's just sort of looking at stuff from a more cautious point of view and thinking, this, like, for instance, let's say using mergers and acquisitions, for instance, right? There's going to be some companies that you'll be buying and some businesses you're buying that may not be here in 5 years. So you need to take that more cautiously from that point of view. Do you want to buy something that won't be here in 5 years? If you're in property, for instance, there's certain aspects of property you may not want to buy because it's a bit ropey and a bit uncertain times at the moment. So it's just looking at things from a different view and just being like, the one thing that I think that people forget when it comes to investing is, look, if you're investing in something, you should be looking at, especially if you're value investing, at a long term. So this will become a speed bump on the journey, this whole COVID thing. Probably a pretty big one, but and things are changing a lot. So yeah, look, from the way I've been investing now, I do think a lot of things are changing. And we're sort of in the 4th industrial revolution now, I think. So I think that coming into this, you should definitely sort of realign and rebalance what you're doing. But yeah, still continue to do what you're doing and what you believe in. That, if you look at, for instance, if you spoke to, my dad's a financial advisor, and we have these debates all the time, right? That obviously you can only pick certain things of where people can put their money. Now, if you do ask a financial advisor, like, where should I invest my money? They're going to show you charts from the 80s. And from the 80s, we've had huge growth and a huge boom. If you look pre 1980, it was a lot of flat, the stock market was flat, but they're not going to show you that. So, we go through these stages where things grow and things don't grow. And I just think that we need to, let's rebalance things. Let's have a little look at what we're doing, where we think we're going, where's the best places to allocate your money, or regardless of what you do. And that's all I've done really in the last 12 months. I've seen that we've moved more into a digital space. So it's like, tech is obviously an exponential growth. So is population. So we need to look at where things are going, and especially from a tech point of view, tech's just eating everything. So, rather than invest in I did hold a lot of sort of bank stocks, probably 18 months ago, where now I definitely don't want to own any of those just because of the way things are going. And I look at more stuff there's a lot of stuff like even e-gaming, bioscience, obviously blockchain, and the way the world's going. I think that's where you need to rebalance portfolios. And obviously I love people like Warren Buffett, but Warren Buffett, for instance, he would say Bitcoin's rat poison, but a 90-year-old Warren Buffett does even need to take that chance.
Yeah.
So it's looking at when it comes to investment, this yourself, it all depends what age you are. Just like when you take a mortgage, you're going to get different rates, different products available to you if you're 60 years old, if you're 21 years old. It's just all down to age. And so when you have conversations with people, some people may not like what you're saying, but you could be at a different age. I think age is everything.
Yeah, I completely agree with you. And it's funny because I've had a conversation. My brother-in-law works for Hargreaves Lansdown, so I'm quite lucky that he does a lot of analysis and all that kind of stuff. But it's quite simplistic, but it doesn't need to be any more than that. Is that basically kind of the earlier you are in your life, the more risks you can take, the more adventurous you can be, because you can allow for those bumps in the road. When you're 70 years old or 60 years old, or even, to be honest, if you're in your sort of late 50s or mid 50s, you need to start looking at rehashing your investment portfolio to be a lot safer. Chucking all your monies in like bonds and stuff like that really is relatively safe. It starts to become a lot more, I suppose your appetite for that's going to grow, because you don't want to spend your entire life investing and then just by complete coincidence, the day you want to retire or you want to start drawing on a pension or whatever it might be, suddenly there's a massive market crash or some kind of natural disaster or the pandemic that we're currently living through now occurs, and basically you end up losing it all just by complete coincidence. So I think that's really, really good advice. So I think one thing I was going to ask off the back of that is, obviously you're talking about technologies. You mentioned blockchain. Bitcoin has seen this huge growth over the last year. And like you said, someone like Warren Buffett doesn't necessarily need to take the risk on something new like this. But, me as mid 30s, I see myself moving on in life a little bit. I'm not 90 by any stretch of the imagination, but it has sort of made me think, am I a little old for Bitcoin? So from your point of view, obviously there's a lot of people listening to this that probably will at least have a piqued interest in it. Has Bitcoin sort of seen its growth now, and will it start stabilizing? And is it really, in your opinion, kind of really worth investing time and money in? Or is it kind of like, well, the ship has sailed there and the big growth has happened, it's probably better to look elsewhere?
Well, Bitcoin, even though it's a phenomenal growth, especially over the last, say, 3 or 4 months, is actually, it's the best performing asset class in the last 10 years. So before the last 3 or 4 months, people could have thought it had slow growth. But when you average it out over the last 10 years, it is the best performing asset class. I think that we're just getting started with Bitcoin. The reason why I think that is, for one, I wouldn't say it's like gold yet, but it's similar to gold. Like, it doesn't get affected by negative rates. Economic fundamentals, it's just a basic case of supply and demand. But I think that this time we've seen all these huge institutions piling their capital into Bitcoin. Now, this has never happened before. One thing I don't like saying when it comes to investment is it's different this time, because but with this, we haven't seen this before. So when you're looking at massive hedge funds what's going to happen here is you've seen like Michael Saylor putting their cash reserves into Bitcoin, MicroStrategy's cash reserves into Bitcoin because he prefers Bitcoin over fiat, right? Now you're seeing hedge funds sort of to endorse it. Banks are already endorsing it. But what's happened here is usually the banks get a first chance at something. So they'll buy an asset first. And then by the time it comes to people like me and you, the big moves already happened. We'll still get some sort of growth out of it, but it's harder. This time has been the complete opposite. So retail investors have bought first and the banks are going to buy last. But the only thing that does worry me about Bitcoin and sort of the crypto space is, Bitcoin hasn't even hit a 1 trillion market cap yet. So when you think of the forex markets trading 4 trillion a day, and you've got people that can move those markets, people can move this market quite easily because of the capital they have. Now, my biggest worry for Bitcoin is the fact that banks have the money to move the market. So, they could be lining us all up for a big short, or they could just be holding it. Some of the metrics I look at is the amount of Bitcoin being stored off exchanges. So it's at peak at the moment. So it's showing that people are just holding Bitcoin. They don't really want to trade Bitcoin. So people do look at trading volumes and stuff, but there's a lot more like holders of Bitcoin or hodlers, whatever they want to say, of Bitcoin. So I think we are just getting started. And the fact that, gold as a store of value, if you want to look at Bitcoin as digital gold, where I don't think it's really solidified its place as a store of value yet because it's so volatile. But if you look at gold as a store of value with a $10 trillion market cap and Bitcoin hasn't even hit 1 trillion yet, then as you can see, if that is the space it's going into, it's massive growth to come. I don't think we'll see anything less than $100,000 Bitcoin, to be fair. I think we're definitely just getting started. But, people were saying at 5K, they want to wait for a pullback, 10K pullback, 20K, I want to see a pullback, 30K. I've seen a 40K Bitcoin now, and people are waiting for a sub 20K Bitcoin again. Look, it could happen. It could happen tomorrow, but if you keep waiting for something, it's like Tesla. To be fair, I was on the fence for Tesla for a long time. I held Tesla at $200 before the stock split. And then because I was so uncertain, every time Elon tweeted, it was moving the market too much. I just didn't like it. I thought that, but this is back before this COVID stuff. And I was like, media is moving the market too much. And, he goes on Joe Rogan's podcast, smokes a spliff and then moved the market. I don't like that type of stuff. It's too uncertain for me. And,
it's very much connected to him as an individual. So, as we know, individuals are volatile, and so
yes,
you don't want your stock connected to that, really.
No, and and obviously, but now it's like all stocks are sort of connected to the media now, whereas basic basic TA and stuff doesn't really exist. People's not really looking at earnings. The PE ratio doesn't really matter anymore. Like Tesla's PE ratio is over 1,000. It's just sort of basic fundamentals have changed now. But the reason why I like sort of the crypto space more than anything right now is, for one, obviously I feel that we're right at the start, but the whole banking system I feel does need a reform. The people at the top see it. The IMF, they've called for Bretton Woods 2.0. The World Economic Forum is talking about a reshape and a reform of the financial system. So, all like the sort of the people that matter are talking about it. If you think about it, I posted something within we got like a private 5am community Facebook group, and I posted something in there this morning actually, saying, someone messaged me and said, if they can print trillions of dollars overnight, then why are we still paying tax? And these sort of questions, like how can you answer them? Like when you think of the Federal Reserve, like it was created in 1913, and they basically created Fed notes that were 40% backed by gold. And then in 1929, this basically led to excess borrowing. So bank loans was basically used for stock market bets. And then when the stock market crashed, it just destroyed the supply of money. So all the over leveraging from the central banks, this isn't new. This has happened before. They've been in control with expansion and bust cycles for many years. And this could be nothing new. But when you look at sort of it from that level, the central banks now, the retail banks are there to basically be the middleman between us and the central bank. With the central bank digital currencies becoming into play, like every global economy is working on one, it changes everything, because now they can lend to you directly based on your situation, and they can tax you directly. They could tax you different to somebody else. They could, your interest rate could be different to somebody else's. They can do it directly, whereas before everyone's on the same interest rate. The base rate is what everybody sort of goes off. And let's be fair, there's a load of European countries in negative rates. We're going to be in negative rates before long. And it's funny when you look at quite old economists who's been in the game for a very long time say that we're never going to see negative rates, and now it's becoming reality. And there's so many things I talk a lot about, especially like the European banking system's very flawed, and the Target 2 system and all the other things around the European banking system. Like Italy's basically made up of non-performing loans. And when you look at the whole banking system from a whole and the amount of QE that's being done worldwide, it's sort of like, what sort of intrinsic value does money have anymore? Like now it's not backed by gold. It's just, every fiat currency has 100% failure rate. Average one lasts like 25 years. Global reserve currency is 100% failure rate. And I think we are coming to the end of the financial system as we know it. Now, the average person probably won't know much difference because they're just probably going to get an app that they download, an e-wallet, and then you hold this e-wallet with a central bank. I think that they're probably going to use it to incentivize like a new universal basic income and potential like health passports and stuff based off the back of COVID. Yeah, I think that it's a lot of it's down towards control and tax automation, and it could be a good and a bad thing.
It's funny that I think what you're getting at a lot of that there is, and as somebody that's done 2 history degrees, I like looking back to learn about what's coming forward. And, we are kind of repeating what's happened previously. When you think back to, a few hundred years ago, and, just different variations of coins were the only way in which money was transferred. And actually certain massive international economies, like, for example, the Spanish back in the 1600s and, dominating the world, they completely died because they felt that the best way of showing that they were rich was to hold huge reserves of cash, which became very outdated very quickly. And the likes of, what was England, but now the UK and the Dutch markets, things like that, they were the first countries in the world to operate what is now known as a sort of a stock system and an exchange system. And we can look back on that and potentially use that as a blueprint for what countries need to do moving forward, which is, economies change and the way we view money changes. You go back 20 years and most people use notes and coins. Now most people use cards, and money is basically just kind of electronic signals sent around the world. So it's those economies that really grasp and take on these new ways of doing things, which is, again, I am a proud Englishman, or I should say a proud Briton. I know you know English, mate. So I'm from London originally, so I'm always thinking England. But I'm a proud Briton because I do genuinely believe that London is the financial capital of the world. But I also think it's because over the last few hundred years, we've been pretty forward thinking in terms of our economic policy when you compare it to the rest of Europe in particular, and then, parts of the rest of the world, America, that sort of thing. It helps from a time zone perspective that we can trade with the whole world in a single 24-hour period. I think that's a massive player, but, Paris could have done that. Berlin could have done that, and they didn't. So, it's not just about that. So I think what you're saying is absolutely true. We need to learn from the past. We need to move with the times. One thing I was going to ask you about the Bitcoin thing. Can you see a point where we actually buy stuff more in Bitcoin? Because I had a question a client wasn't saying to me, can I do it? He was just asking the question just as a conversation stimulator of whether I would accept my fee in Bitcoin. And I said, yeah, my fee's 1 Bitcoin. Yeah. Which sounds a lot less than pounds. But, could you see a time when that actually happens, where people actually internationally buy using Bitcoin as a currency?
It's hard to say, because if it becomes a store of value, then maybe not. Because let's say, especially how volatile it is at the moment, like let's say you bought a coffee today in Bitcoin and it cost you, I don't know, £4, and then tomorrow that same coffee costs you 10, you're going to want to trade in Bitcoin. Now, I think that there could be some global trade done in Bitcoin between nations. As far as us personally, I'm not sure. Like, who knows? We could see a Bitcoin standard. I don't know, maybe not. I think that the thing is with Bitcoin, it does rely on, is someone, a guy called Raoul Pal talks about quite a lot about the network effect. And, that's what Bitcoin has. It's had the advantage, the fact it's already endorsed a network effect. It's the same as money, though. Like you were just talking about the history of money. And, when people was told they had to hand their coins in, they could have notes and use paper money. That was endorsed by society, and is done as a medium exchange because we, as society, allowed it to happen. And so if the network effect happens again, and I do see a lot of people say it's not going to happen because it's Bitcoin. It's like, well, we don't know because we wasn't around, but I'm sure people shared the same thoughts back then, handing in gold coins and silver coins for a bit of paper. So I think potentially it could happen. I think it's too early to say. But yeah, if it becomes a store of value, probably not. But I do think it's quite early days at the moment to say what's going to happen with that.
Yeah, I liked your analogy as well about sort of Bitcoin or crypto being maybe like the sort of the new gold, if you like, and could potentially move into that. I mean, I know, you've mentioned, I've seen you post a few things about investing in gold, and it's weird because I like you, I'm part of a few different groups. In fact, we talk about various different things. Whenever gold comes up, people kind of go, yeah, so what's that all about? Isn't that what my granddad was meant to be investing in? But it is still relevant, isn't it? I mean, I've got plans that I want to try and buy a bit of gold this year, and because actually it doesn't show any signs of stopping being a really good long-term investment. This is the key with this kind of stuff, isn't it? It's the long-term investment aspect to it, and the same will be with Bitcoin potentially. You buy it now, really what you want to do is you want to realize that profit in 50 years time, not in 50 days time.
Yeah, well, I said gold's more of, you could look at two ways. It's wealth preservation and pretty much a hedge against money printing policies, like, or an economic crisis. That's what gold is usually used for. So there's also a hedge against inflation. Yeah, and it's also a hedge against inflation and deflation. If you want serious growth and stuff, then gold probably isn't for somebody, to try and get huge growth. Not saying I don't think that it has a massive upside. I think it does, but I think it's more for somebody who wants to store wealth or it's a store of value at the end of the day. But I also think silver as well. I'm more bullish on silver than gold long term. Silver's the second most used commodity in the world. The gold to silver ratio is massive. I think that silver is so undervalued, and to buy a coin for like 23, 24 quid for a silver coin at the moment, an ounce of silver is very cheap. So I think that both do have a place. I think if you used to build sort of a diversified portfolio, but I think it all depends again on age, what you want to do, and like you're not going to get no dividends off gold or silver. So it's like if you're looking for some sort of cash flowing asset or something, then or some fixed yield asset, and they're probably not the place to put it. And also, I think that before, people were sort of looked down upon for storing gold or silver in your home. It was like, don't store it there. It's not safe. Store it in Singapore, Switzerland, or a bank. Now, right now, with all this going on, they're probably the last places I want it, because let's say I had all my gold and silver in Singapore or Switzerland and I wanted to access it, but I can't fly there to get it, then who owns the gold and silver? And it's the same as in a bank. If you want to put in the safety deposit box in a bank, I don't really trust banks at the moment either. So it's like, it becomes a place where it's a difficult decision because people don't like to store huge amounts of gold, cash, or anything else in their houses. But it's the same as a ledger for Bitcoin. If you store your Bitcoin or crypto in cold storage or in a hardware wallet, then where do you put that? So it's sort of it's down to the individual. But yeah, I think that gold and silver definitely have a place in a diversified portfolio, but I think it depends what stage you're at and how much you want to allocate.
Yeah, no, I tell you what, I'm interested. I'm not very question and answer on these podcasts usually, but I think just because of all the stuff that we're discussing, it's just throwing questions up in my head that I'm just interested in your viewpoint on. So
Yeah.
if you had, I don't know, let's say 100 grand, and in terms of asset class, you were only allowed to put it into one. What, in terms of just like quick fire off the top of your head, what's the thing that you're thinking, yeah, do you know it's going to go there?
Either crypto or emerging markets.
Yeah. So Sorry, go on.
So crypto, if you want to look at growth and a safer option, obviously there's plenty of different cryptos you can put money into. I would just say put it in Bitcoin and Ether if I was going to allocate it just to crypto. If it was emerging markets, I look at probably India or Iran, somewhere like that, probably, if I was to put it all in.
Yeah, it's funny, isn't it? That when you talk about emerging markets, and I have discussions with clients all day long, and yeah, of course, I'm trying to help them raise finance for property projects 97% of the time, but we do end up talking about their overall asset base a lot of the time, because lenders like to see that for to give them more comfort in their borrower's situation. And it's funny, whenever I start talking about emerging markets with clients, it's still incredible how much of a stigma is sort of attached to it of, do I really want to bank my future wealth on what India is doing, or what Iran is doing, or what even what China and the Middle East, the Far East are doing? Or Africa are doing. We've seen so much growth in all of those areas over the last 50 years, and it doesn't show signs of stopping, but people are still seem to be more happy to put their money at home, if you like, in like a FTSE 100 tracker or something like that, than they would be into emerging markets, just because they see it as not foreign in the actual physical sense of the word, but the nature of what they do is foreign to or how they go about their daily lives is seen to be foreign to what we do. So they feel it's hard to put their money there.
Yeah, I think it's the same as if you go abroad, for instance. Like if you go to, say, Thailand today, the UK tells you to have vaccinations, but then the Thai people don't have the same vaccinations. So it's sort of because it's what we know. And I think that to me, it all comes down to, say, like demographics and stuff. So India has a very young population, endorsing blockchain technology. It has massive growth ahead of it. Same as Iran. And when you look at even the Middle East, like we're going into a lot of renewable energy now. This is a massive topic going forward, especially climate change and all the other stuff. And the Middle East is the hottest place in the world. So who do you think is going to, where do you think that the solar farms are going to be put if we need a load of solar energy? It's the same as obviously oil. Like I don't want to go too deep into all the history and stuff, but there's a reason why America created the petrodollar, did the deal with Faisal, because of the oil. And so if you follow the money trail, you usually find the answer. But yeah, you're right. I think as society, especially as like Brits and all same as Americans, Canadians, we all want to put in our own country because we trust it, because it's what we know. And we look at countries like India and think they're not doing as good as us because we're the UK, we're America. But we thought the same thing about China, the slow growing giant, and now China's digital currency is years ahead of us. And it's probably the one thing that scares me the most because of their thoughts on stuff. Now, I think China's amazing. They've taken most of their country out of poverty in the last 20, 30 years. It's amazing what they've been doing, buying up all the world's gold, buying up all the US bonds. They own more of America than America, I think that their digital currency, they could quite easily steal global reserve currency status based on the fact they're already far ahead. Now, oil's use is becoming less and less. So the petrodollar, how far is that going to go? How many people are going to sign Bretton Woods 2.0? Are there going to be the same nations involved? And then when you look at China, they have a massive presence in Africa and a massive presence in South America. If they start lending directly from their central bank digital currency, and people in Africa and South America can download their e-wallet, and then they think, well, this works. Why don't we go and let people in the UK do it? We got a big presence in the UK, and then me and you start downloading the Chinese digital wallet, and they lend to us directly. They're in a pretty strong position if they start doing that. And that it can be quite worrying based on the whole social credit score and the way they think of doing things.
It's funny actually you say that. It's if people want to actually genuinely know kind of how the world works from a financial point of view, there's a really good case study, I suppose. I was saying earlier about my love of reading about successful people. One of my favorite books I read last year was Shoe Dog by Phil Knight, the owner of Nike. And Nike was funded by China.
What a book. Amazing.
And if you want to know what it's like to not have a plan and just basically just every day just try and just drag yourself to success, that's a great story. But yeah. At the heart of that story it's one of an individual in America trying to build a brand and sell product essentially that was, eventually bankrolled by a foreign country. Nike really is seen as, one of America's great companies. Wouldn't have happened if it didn't have any outside investment.
Yeah. And I think as well, it's just because, like I said, we embrace our own society, and it's the same as our income. People are so concerned about their hourly rate changing £1 down or £1 up, and they don't ever focus on the price of goods changing. So look, it doesn't matter how much you earn, it's how much you can get for the money. And people always forget about, they don't even look at the price of goods and the change of the price of goods. All they care about is what they earn. And if you look at the average income hasn't changed much since 2000, but the price of goods have. But we just embrace our society too much, and we only do what we know, and we forget about all the indicators that change on a day-to-day basis, on a yearly basis, and then we become complacent. And that's why people end up in the situations they're in, unfortunately, because they wait until they're too old to take financial advice, and by then it's too late.
It's funny you talk about the price of goods. This is going to make me sound like such an old man Brit. The way I think about the price of goods is how much does a pint of beer cost? And if you think back, I mean, like I said, 36 years old now. So when I started going out drinking when I was a kid, you could still buy a pint in London for £1.50, and now you don't even see that in most of the UK. So you look at the increase in the price of just that one product, well in excess of inflation. Just absolutely, like you say, just goes to show that the irrelevance actually of earnings. It's all just about what that money can get you nowadays. It's pretty incredible.
Yeah, 100%. I think it's something that people should focus on a lot more. Like I said, people wait until they're too old to take financial advice, and by then it's usually bad financial advice because there's nothing they can do for you because you're too old. And it's just sort of the cycle by the looks,
Yeah, no, absolutely. Dee, do you know what? I've loved this conversation so much, just because I love talking about this kind of thing. Hopefully what we've been jabbering about has been interesting for people that are actually listening. For me personally, I've got a ton out of this because I've enjoyed it. I've enjoyed it massively. It makes a huge change from just talking about mortgages and bridging finance all day long. But Dee, I really appreciate your time today, and genuinely, I could probably carry on talking to you for hours. Look, for those of you that are interested, those people that are listening that are a little bit more interested in maybe even joining the 5 a.m. club or getting to know a little bit more about what you do and the advice that you give pretty freely in a lot of your posts online, what's the best way of them reaching out to you or following you online?
So my IG is DEE_Ludlow. The 5 a.m. club is jointhefivamclub.co.uk. You can find out about there. And we got a private Facebook community where we just talk about different investments and share our opinions. And that's called the 5 a.m. club community on Facebook. So everyone's welcome to join. Usually IG is probably the best place. Most stuff that I'm doing is posted on there.
Amazing. I'll make sure I post all the links in the show notes so everyone can easily access all of that stuff. But Dee, I can't let you go without asking you my favorite question of all, which you said off air that you were a big chocolate lover. So I'm hoping for a good answer to this. So tell me, Dee, what's your favorite chocolate?
I haven't got one favorite chocolate, to be fair.
You're like me.
Yeah, I love chocolate so much, so I haven't got my way. I like Dairy Milk and Galaxy, but I do like Ferrero Rochers too. So do
you know what? I'm a great fan. Certain chocolate, yeah, okay, you can change it, and like for example, at the moment, Dairy Milk have got this blueberry and white chocolate Dairy Milk, which is incredible. So that's okay, but Ferrero Rochers, don't fuck around with the Ferrero Rocher. They've tried that. They've got one with like coconut on it, and they've got one with like white chocolate. No. Ferrero Rochers are that staple. Like you can't muck around with a Ferrero Rocher. That's the one.
I agree, totally agree.
And do you know what as well? I don't know. I mean, obviously at the moment they're all shut, but when you go to those Shake-tastic and all those kind of like milkshake places, Ferrero Rocher milkshake. Yes.
Unbelievable.
Oh man, I'm on a diet at the moment. So whenever I do these podcast episodes and I'm talking to people about chocolate and milkshakes and all this crap, I'm just like, oh, what am I doing to myself? Not good at all. But Dee, thank you so much again for coming on. Your knowledge has been absolutely invaluable, and hopefully it's been a great episode for people listening on. So enjoy the sun, you bastards.
Thank you.
And I'm sure we'll catch up again very, very soon.
Definitely. I appreciate the invite. I enjoyed it.
Good stuff. Speak to you soon. Thanks, Dee.
Cheers, mate.